Well, good morning, and we're excited to host Paul Daugherty today. Thank you for joining us for this discussion on the future of the IT landscape. The session is part of our series of discussions that share insights from leading scholars, entrepreneurs, executives, and investors in the evolving economic, business, and technological environment in the United States. And again, sponsored by our firm here, March Capital. Today, our guest is Paul Daugherty. Paul is the Accenture's Group Chief Executive for Technology and Chief Technology Officer, and a great partner and friend of March Capital. He oversees all aspects of developing, delivering technology capabilities for Accenture's, bringing innovation, intelligence, and deep industry experience together with leading technologies from ecosystem partners to help their clients reinvent their businesses as intelligent enterprises innovate at scale. The numbers are staggering. Over about 500,000 employees or team members working with top companies all over the world. Paul's role at Accenture puts him at the forefront of digital transformation, which is a key theme. He oversees R&D at Accenture Labs, and they've set up this year Accenture Ventures. Also, he's responsible for managing Accenture's partnerships, senior level relationships with leading established emerging technology companies on one extreme, SAP, Microsoft, to the up and comers like ServiceNow and others, but we might know very well. But Paul is also the co-author of Human and Machine, Reimagining Work in the Age of AI. We have a few extra copies around our office. You want to come visit us, we'll get Paul to sign it for you. It's really a great book on how to, and it helps you understand AI in the business world. So Human and Machines by Paul Daugherty and James Wilson. Paul, thanks for joining us today. After a discussion, we're gonna do some Q&A. We'll open up for audience for questions. You can post the questions on the chat function. You can text me, you can send me a letter, but it won't get here in time because they'll be caught up with the postal ballots. But feel free to use the chat function and we'll get going. Big day today for Accenture. But let's start off before we go to Julie's announcement this morning. Let's talk a little bit about your background and how your career evolved, and kind of tell us the Paul Daugherty story. You know, every time we have a chance to spend time together, I'm impressed by another dimension of your career and interest and engagement, both in Accenture and with your clients and in the community. So tell us a little bit about your background, how your career has evolved.
Yeah, sure. Thanks, Jamie. Well, first of all, thanks for hosting me here, and thanks to all who are viewing this right now for joining. And it was a good description of my background, and we can get into a number of elements of that. But if I had to tell you, I guess a little bit more about my background and where it came from, I'm probably best seen as a engineer and research guy that stumbled into a consulting company and got addicted to rather than researching the technology, to applying the technology to solve big problems for companies. And I really got addicted to that and hooked on it. That was a few decades ago when I made that transition. And I took the advice of an advisor who said, I was going to go into a PhD program in computer engineering. And the advisor said, go get a little business experience first. So I stumbled into the consulting company, which was the predecessor to Accenture at the time, Arthur Andersen, and fell in love with the work. And I was fortunate to have good mentors along the way and got instantly involved in really cool things. So my first project, this is in the 80s. My first project was involved with it was a boring technology, IMS database technology that some may remember from a long time ago. But I was working with a person who became my mentor who said, well, why don't we use small talk and object-oriented design, which was very new at the time, and model this system in a new way, and then generate all the COBOL and IMS data artifacts and application code. And it was just an encapsulation of, for me, of the creativity you could apply. You didn't have to just go develop the system. You could get really creative and figure out the best way to solve a problem for a client. And that got me hooked, and I'm still here many years later. And I guess for the last number of years, my role has been to find and grow new technology-related businesses. So in 2007, I developed our first cloud strategy and then launched and ran our cloud business for a while. In 2013, I developed our digital strategy, and at the time we put out a proclamation that every business is a digital business, and we launched Accenture Digital. Accenture Interactive has since grown to become the largest digital agency in the world, based on the digital efforts we made. So those are some of the areas that I've worked in. But generally speaking, it's been trying to find what are the technologies and what are the ways that are really going to drive a lot of opportunity to do things differently for consumers, citizens, and businesses. And then how do we grow the talent and capability and tools and business to improve our business around it.
That's great. I think he's underselling his broad range of interests, but that's a good synopsis. But I guess if and when you ever retire, you can go back and do that PhD.
It's still on the list at some point.
Yeah, the I mean, there's Julie Sweet at Davos this year, back in January when their COVID wasn't really on the radar, most of the world. She she spoke about the three big shifts. The value of technology. We're no longer spending time talking about is technology good or bad, what the risks. And over COVID, technology has become the lifeline for individuals, societies, business, and government. Would be her quote. The second big shift is about speed. The most successful economies, countries, and companies, those who speed as fast as possible, and
Yep.
we're seeing that every day. And the third shift, which was the announcement today, is a shift in the opportunity to accelerate the achievement of the UN Sustainable Development Goals. So this morning, the timing is great. Julie and Accenture announced a new brand campaign, quote, "Let there be change," with a new purpose, quote, "to deliver on the promise of technology and human ingenuity." And a new approach to business emphasizes what she calls 360 value, help companies address issues like sustainability and reskilling as part of their tech. Well, that's a big agenda there. We could talk for an hour about that, but tell us a little bit about, let's talk about that, and how you got to this point, and how do you make it real, and what's the reaction of your team and your clients to this announcement?
Yeah,
And
I mean,
congratulations too. Yeah.
the underpinning of this is really that we made this big announcement, and it's really a big move today. But it's because of what's happening around us. We've been talking for a long time about this exponential technology change that's driving this opportunity. Everything we're talking about, digital and everything else, is because of Moore's law and the antecedents and the exponential technology innovation and change that's accelerating and continuing. So that's there. That's what's driven this digital transformation, that businesses have been focused on. And then, kind of COVID hits, and it really, rather than other, economic recessions and setbacks and crises, this one, led companies to think differently, because companies realized that technology was the lifeline, as you just said, in the quote from Julie, and that they really realized they needed to accelerate rather than slow down. And you put all that together, and we're in an environment of tremendous change. I was on the phone with an executive from one of the Fortune 100, one of the largest companies in the world, who was talking about how they're accelerating their transformation from a 5-year journey to 1.5 years, because they need to get there quicker. So change needs to happen fast. And what I've said is, if you could give a CEO a magic wand, the one thing they'd probably wish for, they'd wave that wand and say, "Let there be change." And that's kind of the what we see as the biggest imperative facing business, is to change continually to meet these massive changes that are happening and are going to continue to happen and accelerate in society, in the economy, in technology, et cetera. So let there be change is at the heart of the announcement we talked about today. That's our new Accenture brand positioning, Accenture brand. So I turned on the TV this morning. I was watching CNBC, and I saw one of our new ads running. So some of your audience may have seen the ads already. And it's about capturing this era we're in, where change is the dominant theme. But the purpose underlying this is really important, which is, I talked about exponential technology change, but we believe, as you alluded to in the quote from Julie, that technology, there's been this debate: is technology good? Is it bad? There's fake news. There's all sorts of things people are debating. Fundamentally, we believe that the technology is not good or bad. The technology is the lifeline that companies need, and that we're using in a lot of powerful ways. it's the way you apply it though that's important. So it's technology plus human ingenuity is what's important. And that's why our purpose is to deliver on the promise of technology plus human ingenuity, to deliver on the promise of technology plus human ingenuity. So it's the human ingenuity and the 500,000 people at Accenture, the millions of people at our client organizations that we work with, the vast amounts of people we work with at our ecosystem that you alluded to, the large companies in the technology ecosystem, startups, et cetera. It's leveraging all that human ingenuity and the technology to deliver on the promise of a better future. So that's the purpose, and that was developed with our people.
Yeah.
We interviewed, and and people want purpose. It's 70%, from the surveys that have been done, 70% of workers expect companies to be more responsible. When you look at Gen Y and Gen Z employees, 74% of them want their companies to take a stand. The purpose is critical, to companies. It's critical to to employees. It's critical to all of us as we think about decisions we're making. And so that's really why the purpose itself is so important. This purpose around to deliver on the promise is important, because the promise is a better future. And that's why we then completed this announcement today to talk about something that's very important to us, which is the 360-degree value meter. And that means, some may call it, that the kind of the stakeholder capitalism, or stakeholder management kind of mentality, where we believe that you need to deliver in a balanced way to meet all of your stakeholders. And that's, delivering on the requirements for your investors, your employees, your customers, delivering on the goals with respect to the planet, the sustainable development goals, sustainability, and others, and people, thinking about how you develop your own human capital and talent in an organization. So we're committing to to measure ourselves and measure for the companies we work with the role we play in delivering on that promise of technology and human ingenuity, and measuring the impact in a balanced way as it contributes to to these various stakeholder groups. And we think that's really kind of a vision and an approach that that sets us apart in terms of how we view things, but really speaks to the purpose that we have as an organization, what our employees want to achieve as well.
So what's the biggest impediment to let there be change?
The biggest impediment, I think, is all the different elements that come together. That's why you need to look at a big set of tools to drive change in a big way. Because if you look at a company today, they're looking at digital transformation, which is how do you deliver new products and services digitally to customers. They're looking at technology transformations. How do I get to the cloud faster to power that and let that happen? They're dealing with legacy systems, technical debt that are holding them back. They're dealing with skills issues, probably. Do they have the right skills in the business side and the IT side to drive them forward? And more issues. There's financial issues, the economic crisis that we're in, and more. And I think companies struggle with how do you attack each one of those issues and broadly make that change happen. And that's what we're trying to bring to bear. When you think about Accenture and what we do, we can help companies with the strategy and positioning, with the understanding how to change the business, deep understanding of specific industries and areas of the business, with the technology expertise, the experience, experience design and experience development expertise, the ability to do operations and manage services. And that's what you need to really make change happen, is to tackle it holistically, look at all the elements and roll them together, to drive a powerful change.
Well, thanks, Paul. So that segues into kind of a follow-up question. A couple of weeks ago, September 27th, Accenture launched Accenture Cloud First, which represents a $3 billion plus investment, 3 years to help your clients transition to the cloud. Tell us a little bit about that initiative and what the key goals are, and maybe the tech priorities within that.
Yeah, no, it's again, it's part of the strategy that underpins everything.
Yeah, sure, absolutely.
Because what we're seeing, as I said a little bit ago, I developed our initial cloud strategy, about 14 years ago now, a long time ago. So cloud is not new. We've already got a very successful cloud business. We publicly disclosed that our cloud business is over $11 billion of Accenture. So we do a lot of work in the cloud already, and we're leading cloud, the leading cloud services provider, working with all the hyperscalers and others. But the change is the pace of what's happening. right now, and it's really, I would call it, it's really the Henry Ford moment of the digital age. Henry Ford, the Industrial Revolution was going on for a long time before Henry Ford came along, and production lines, the modern corporation, managing work, process optimization, a lot of things happened. I think we're at that point with digital and computer technology. It's been around for 70 years. There's been all sorts of debates about the value of it and the impact on business. We're now at that point where, with the cloud and digital transformation, we're talking about the global replatforming of business, or the
Yeah.
replatforming of global businesses, another way to say it. And cloud is a key part of that. It's the hybrid cloud and the public cloud as you look at how that happens. And what's happening is organizations are roughly 20% in the cloud today. And we believe in the next several years, they're going to move to 80% in the cloud. And when you move from 20 to 80, something different happens. You're
Wow.
not moving parts of your enterprise, you're moving the core. You're moving the digital manufacturing, you're moving the reservation systems, you're moving the really hard stuff. And you need different approaches to do that are fueled by deep industry insight, mission critical systems understanding and advanced technology expertise. And that's what we're putting together in Accenture Cloud First to accelerate that transformation. Like the example I told you about earlier, a company that wants to accelerate 5 years into 1.5 years, that's what we're hearing from our customers.
Yeah.
And so what we're doing with Cloud First is we're putting together an organization of 70,000 people backed by $3 billion of investment that we'll make over the next 3 years, 3 billion with a B. Neither we nor anybody in our industry has ever announced, an initiative, that big. And it speaks to, the impact that we believe we can have to help our clients accelerate with these capabilities. That, in a nutshell, is Cloud First. It's a big thing, and we
Oh,
believe capturing the moment that's happening. As we talk to the C-suite executives, all of our clients.
Well, I'm reading through the fine print. It looks like it's going to include $1 billion plus in acquisitions, $1 billion in R&D, $1 billion in talent acquisition, and plus, we'll talk about your venture investments and your
Yep.
partnership along the way. So it's a really looks like a very comprehensive program, and one that we're highly attuned to at March Capital as we partner with Accenture, with some of our leading companies, and some of them are listening in, Paul. So you have some big fans here. So, Paul, if we were going to architect a cloud first, state of the art IT infrastructure, what would a reference infrastructure look like? I mean, it seems like as you get re-architected, there's a lot of pieces that you can probably do without, or you could simplify. I mean, so if you sat down and someone said, "Hey, Paul, I want to have a cloud first infrastructure," without offending some of your big clients, like SAP and Microsoft, et cetera, and IBM, but what would a cloud first, what are the key elements of it? Is it, yeah,
Yeah, it starts with the cloud,
yeah,
obviously. So the cloud, would be kind of the center of the architecture that we see it framing up. And again, it's a hybrid cloud and public cloud together. And there'd be different mixes for different companies with a lot, moving to public cloud as you look at the trends that are happening. And then the other piece, I'll come back to the cloud piece in a minute, but you start with the cloud. The other component that we think of as part of the cloud is the edge, because companies are looking need to look at it in an integrated way, because the way you connect your edge into your enterprise, the way you connect the edge to the cloud, for many industries and many organizations, is going to be what differentiates them. The telematics in the automotive industry, the instrumented plants in manufacturing, the connected products in retail and consumer goods, connected stores, et cetera. And so cloud, the edge and the way you connect the intelligent edge into the cloud is really critical. And that's, so we look at cloud first, and what we've done. Edge is a big area of investment when we look at that 3 billion and what we're going to do. So it's cloud plus edge. And then, then the next step, and this is something some companies are grappling with, the next step is the data and then the intelligence that you build around that. What happens if you think about the cloud and then connect the edge, you're creating immense amounts of data. There's estimates. This isn't our own research, but third-party research says that 90% of the world's data has been created in the last 2 years. 90% in the last 2 years, and that's accelerating. So it's creating more and more, with every passing month, and only 1% of that's actually analyzed. So the challenge with it is you look at cloud and edge and adding new data in, the cloud becomes an opportunity to consolidate and take advantage of that data in new ways, but it requires a new data architecture, new way to think about data in the cloud. And then the intelligent architectures, which are everything from the RPA and automation to the true AI, the machine learning, deep learning field AI that you build on top of that. And increasingly that's, built on cloud, technology layers. And then you have your applications above that. So we believe applications will be constructed, from those parts. They'll be enabled and based in the cloud, either SaaS based or cloud native, applications. So you probably have two flavors, SaaS or cloud native, setting aside the legacy for a minute. That'll be, connected to the data and intelligence, and that'll be the foundation of how you build the applications. And then the two other things that we look at when we think about the kind of enterprise architecture around it are the security, because you can't build security after, you have to build security in as you think about, architecting these environments. So you have to build secure, and you also have to build for experience, because you want to, what you're ultimately trying to do is create a differentiated experience, either for your customers, your employees, again, citizens or whatever. So those are the elements, the way we think about the, tying the different elements of the architecture all together.
Great. It's not easy is the answer.
It's not. And I think that one of the biggest challenges that a lot of companies are grappling with is the transition. So you have a technology debt today, and you might have, the organizations we deal with have, 3, 5, 10,000 applications in some cases. They have lots of applications across many platforms. And the challenge is how do you make that journey, and how do you make it faster? How do you accelerate that? And that's where,
it may not be homogenous within the corporate entity either. They might have had acquisitions along the way. So
absolutely.
I spoke last year to a room full of chief security officers, and not quite sure why I was speaking. They wanted an investor perspective. And I said, how many vendors do you have, and how many vendors would you like to have? And, the number went from maybe 20, 25 on the low end to 100 on the high end of the bank. And I almost all of them would like to decrease that by a factor of 4 or 5. So there's this real demand to find platforms and simplify. So that leads to my next question. I mean, you big part of your the business, Accenture, has been partnership with Microsoft, Amazon, or AWS, IBM, Oracle, SAP, Salesforce, etc. But let's discuss partnering with the smaller, up and coming, innovative companies. We've seen, great success, with the partnership with ServiceNow, which is probably now a big company, Snowflake, CrowdStrike, discussions with some of our other portfolio companies like ASAP and others. What makes for a good partnership with and for Accenture? What are you looking for? What do they expect? How long does it take for all these things to evolve and become real?
I think the formula that works pretty well is a company, size doesn't matter as much. It's the maturity of the technology. Does a company have a technology that can create value in a new way, at our clients, and we're always looking for that. We track, 5,000 startups and are always looking for what's new. And so we spend a lot of time at this. But we're looking for, the new, what's new, and what's the new kind of value component that a company has, and a little bit of proven success. We do make early bets and work very early with some companies, but we, generally speaking, if we're going to take a technology into one of our large clients for an important system, we need, we don't make sure it's, got some proof behind it. And, but it can still be pretty, it still can be a seed, early stage company. And then we're looking for, a technology that, solves a big problem, but also from our perspective, a technology that, that requires, some of our expertise or can be combined with things we do to add value for the client. And that's not necessarily just a self-serving thing, but there's lots of technologies we see that I meet with a lot of entrepreneurs, and I say, man, that's a great technology, but we can't really help you a lot because it's a technology, might be a plug and play or something. It's like, good luck, you're going to do great, but it's not synergistic with our model. What's synergistic is when we can connect it to an industry solution or offering we have. So, in financial services where we have a large business helping clients with compliance related practices. There's AI technologies that we've invested with early stage companies to plug into that and help clients to do it effectively. And so it connects with something we do. If it's those are the kind of things we're looking at. If it's a great technology and it's more standalone for a company, the company may be very successful, may be a good investable company. It just might not be the best partnership for Accenture, because to sustain the focus for us, it has to be something that kind of helps drive our business too. And
Well, I mean, these are big partnerships. I know now that told me they do over $1 billion a year with Accenture. I mean, and if you're trading at 15, 20 times revenue, that's a big, that's an important customer. So, I mean, these are great partnerships, and I mean, these have your footprint.
yeah, well, and our strategy generally, Jamie, along those lines is, if we're going to partner with somebody, we like to do it seriously, and our goal is to be the top provider of that technology, which is what we do with all of our top partners. We're generally the leading partner with them in terms of capability and size. And when we look at the smaller partners, that's kind of the role we'd like to play. If it's good, then we want to do more of it than anybody else. So that's the mindset we've got. And so the formula that is, we kind of, there's different ways we can partner with companies. Sometimes we invest, which we'll talk about a little bit, through Accenture Ventures. There's a kind of a talent model. How do we build the capability? So we have the Accenture, skills, and whether it be sales skills or engineering skills to deploy and manage the technology. So those are some of the things we look at.
Well, I got about 4 different trains of thought that are coming out of your comments, so I apologize. I guess one question is, you go back to that moment a couple of minutes ago, you said 20% to 80% in the cloud. What are we talking about that? I mean, is that like trillions of dollars of spend? Is it that much? Or
we think and this is from we use industry analysts, so we don't do economic forecasts, but triangulating from the industry analyst data that we've looked at, we believe that's it's about a $1 trillion opportunity over the next 4 or 5 years. So that's a significant market, and that's really just the migration and modernization of the applications to the cloud.
Phenomenal. And then we started talking about earlier stage companies, and that segues into a question regarding building out the innovation ecosystem. In March, Tom Lunabus, experienced Silicon Valley entrepreneur, old friend of both of ours, joined you to lead Accenture Ventures. Maybe discuss the strategy and the approach that Accenture is taking and what you look for in your investments. We formed. I'll get to Tom in a minute, and we formed Accenture Ventures about I think it was 5 years ago, roughly. And it was run by Mike Redding for a number of years. We did a great job, launching and running Accenture Ventures until he retired recently. And we had a strategy of that we started with, because we were just getting started, trying to figure out how to do it. We generally were looking for growth stage companies, B, C type of companies, and companies that had a product we could quickly deploy to market. So we're kind of later stage in the cycle, and that worked well. We had a lot of good successes. Not all of them, as you'd expect with an investment portfolio, but we had a lot of good successes in there. Over 30 companies we invested in. But then I think you'd probably agree, Jamie, the investment environment changed a little bit, where kind of seed became the new A, or however you want to view it. So the round sizes changed a little bit, and investing approach changed. And as we got more, into it, and as I started talking to Tom, before Tom joined Accenture in January, he had been an advisor for a long period of time before that. And as we looked at the strategy, working with Tom, we realized that we could be very successful. Shifting left is the word Tom uses, shifting left to earlier stage and seed investments. But with a different mindset, not just looking to invest in a company and grow a business around it, but looking to use the resources of Accenture to help shape companies to some degree. We've got a lot of market expertise in different industries and technologies and all sorts of things, and using that knowledge to connect with entrepreneurs, help them understand the market opportunity we see at an early stage, invest in the companies, and then grow from an earlier stage, we see as a great opportunity. So we formed something called Project Spotlight that Tom is running, which is doing exactly that. We're very excited about the promise of it, and we think this is going to be better return probably for the companies we're working with in terms of value to them,
better returns for our customers. And we think we're going to grow some really exciting businesses and get involved early with some very successful companies as a result. I can give you some examples if you're interested.
Well, we'll certainly follow up with you and Tom on that, but that's exciting to hear. And look, all strategies evolve and come into focus. Now, another follow-up to a recent question I was asking, we're talking about technology. Aside from the cloud, what do you think, what's your view on what other technologies will be most impactful? Is it, you mentioned compliance and anti-money laundering, kind of financial world. There's been
Oh,
discussion about predictive insights, supply chain visibility, application of
yeah.
blockchain. Which ones do you think you're starting to see the real pickup that is complementary to what the cloud first
Yeah.
strategies?
Well, I'll actually build on the point we're just talking about on
Okay.
ventures and talk about some use cases that I think have really exciting potential. Then I'll talk about maybe some broader trends.
Okay.
Because I think there's some really exciting opportunities kind of within the areas that I was mentioning. So if one of the investments we've made, Tom's made through Accenture Ventures, is a company called In Country, which is deals with data sovereignty with respect to cloud and data, in cloud-based data, kind of residency issues. This is a massive issue in Europe
Yeah.
right now. Not just GDPR, but dealing with data sovereignty and other issues. And if you get back to your question you asked earlier, what's slowing companies down? It's things like that. So entrepreneurs who can solve a problem of giving companies a view on how they can be compliant dealing with data sovereignty is a massive opportunity that could scale really well. That's a good example of something that we can then tie into our cloud offerings with all the investments and focus we talked about earlier and grow rapidly. And there's another one that I'll talk about that is interesting. I think there's a lot of talent related investments that we see, and I'm sure you've looked at and have seen many,
Yeah.
AI and recruiting and all sorts of really interesting applications. One we invested in recently is Skyhive, which has a technology to understand skills at a more granular level, skills of a person and skills of a role you're trying to fill, and do a lot of analysis to help you triangulate and find where you might be able to get skills in unorthodox ways or in ways you might not have expected, and find the patterns of how those skills develop. And again, it's a technology we're already using at Accenture that we think can scale a lot because talent is such a key issue to all this let there be change world of the future we talked about. So I think there's massive use cases like that around some of these areas that are, and I could talk about more, but those are a few of them.
Yeah.
You look at the broader patterns, cloud, obviously, lots of areas around cloud is going to continue to be an interesting area. New models, Snowflake is a good example around data in the cloud, and data itself is a theme. I think we still lack. There's a lot of great data tools out there, but there's room for better and better tools to help clients manage their data more effectively. And I think there's room for more innovation to tackle data related issues in many ways. AI, obviously, we wrote the book on human plus machine. I think we're still so early in the AI period in terms of really building AI into applications and understanding how to use AI. So that's a tremendous room for innovation. A lot of companies doing exciting things there that we're working with many early stage companies in that area. Edge is again, edge is going to be the big theme. And the thing about edge, I think, will be industry differentiation. You'll see companies come up who specialize in the edge around manufacturing, the edge around process industries versus product industries, the edge around mobility, et cetera. And I think there's a lot of room for industry specific innovation around the edge, which we expect to scale as well. And then the other thing that we're taking a hard look at, given we have 500,000 people in my group at Accenture, we have about 280,000 people who do technology work. We're always looking for better ways to do it. We've got we've got a lot of patents on our own platforms for advanced development and advanced technology techniques, but we're always looking for new technologies there. We've got a very open mindset in how we build these acceleration platforms. This is pipeline development, CI/CD, all using AI, new techniques in terms of how you build applications, automated testing, and various things. Tremendous room for innovation around systems development itself, which is something we're spending a lot of time on that we think could be very disruptive going forward. And we don't think it's disruptive to our business because our approach has always been, if you see a technology that can just disrupt your own business, go faster at that and be the first to it. It can work out well for you. And that's worked out well for us in the past, and we expect it to work well going forward.
we invest in things that we believe are inevitable. And so sometimes it's just when it happens rather than if it happens. And it's really paid off very well for us. And what you're talking about is all inevitable. And it's just been accelerated by the conditions we've had this year. But are you seeing much change of pace in cloud adoption and other technologies by industry sectors? Are some moving faster than others? And, private sector versus government, the finance versus manufacturing? Is there any patterns emerging there?
My honest answer, Jamie, is it seems to be evening out.
Okay.
There historically had been patterns where you had early adopter in kind of high tech and financial services, certain sectors depending on technology, and then it moved across sectors. But it's really consistent now in terms of what we see. We see amazing innovation in I could point to an example in every industry. And cloud is leveling out. There were some industries that were lagging in the cloud. I'll talk about insurance as an example. I think insurance, if you go back 5 years, insurance would have been more of generally speaking, a laggard from a technology perspective, kind of a very slow in kind of making moves to the cloud. And one of the hottest areas right now is, or I should say, the industry I'm probably meeting most with right now is insurance, as they're looking to accelerate their move. And everyone of them is making big moves. Part of it's maybe startup driven. You look at Lemonade and new disruptive models.
Yeah.
And part of it is that once somebody starts moving, you better move, because there's going to be
Yeah.
a need to differentiate and drive faster. So we're seeing that dynamic happen in every industry. So we can look at
Those have been kind of sleepy businesses, and they're really starting to accelerate.
yeah.
Well, I've discovered this feature on Zoom where you go to more and you can elevate a attendee to speaker. I've elevated Ron Sugar. Dr. Ron Sugar is a full disclosure. He's an investor in March, but he's also chairman of the board of Uber and on the board of Apple, Amgen, and Chevron, where he's a lead director. And I thought I'd just, we often talk about how companies balance, this 360 value that Julie talks about, addressing issues like sustainability and reskilling, as well as delivering to shareholders. Ron, do you want to ask a follow-up question on that, or share some experience you have? And also, Paul, meet Ron.
Hey, Ron, how you doing?
Paul.
Well, first of all, I'm honored to be elevated. This is great. If I don't
know, you would have worn you would have got out of your pajamas.
Well, no, I'm wearing something much more better than that. But I would have worn a tie. Hey, listen, Paul. Please, I loved your comments. You commented earlier about companies moving from the 20% cloud-based to the 80% over time. And Jamie's comment earlier that certain things are inevitable, just a matter of the time and the pacing. To the extent that you could comment, do you see winners and losers out there in terms of significant companies, or if you feel that's a little too sensitive to say, maybe industry groups or categories that you say as winners or losers as you make this transition?
Yeah, I think I probably won't name individual companies, but I think it's going to be based on, I think there will be winners and losers based on the pace with which people can make that change, because the companies are competing around digital transformation and differentiation. And the reason cloud's accelerating is not just because people want to be in the cloud for cloud's sake. It's because it's the tool companies are seeing to enable and accelerate that digital transformation. That's why they want to move faster. And this 20 to 80 it's CIOs, and in many cases it's the CEOs saying that that they need to get the whole company to a new place where it can innovate faster. And getting to 80% means that they'll have their applications transformed, they'll have their workforce transformed and ready to do it. And the companies that are a year or two behind, I think, are going to struggle. And that's what we've seen already happen through COVID. And why there's been this COVID acceleration is just one example. We had a retailer that we were working with, one of the big box retailers that we had worked with before COVID. We had worked with them on a curbside pickup approach and a pilot scale that they had running. The fact that they had that running meant that when COVID hit, they could massively scale that, and they did actually quite well in adapting, because they had the basic capabilities in place to do it, contrasted with others who really struggled. Similar way, working with a manufacturer who had piloted virtual augmented reality for remote factory inspection and training, and but it always sat on the shelf because there wasn't a great business case to deploy it. COVID came and they had the business case to deploy it, and they were able to use that to keep factories running in many cases. And one of the executives I talked to put it a good way. He said COVID has given us a new business case for innovation, because it allowed us to unlock problems we couldn't push out before. So, and I think that's while COVID accelerated that, I think that's the kind of lesson of digital transformation. And to answer your question, I think those that don't get the platform in place will fall further and further behind. We've talked about this digital achievement gap. I can talk about it a little bit more if you're interested, Ron or Jamie. But some research that we announced in Davos this year before COVID that showed that the 10% of companies that were digital leaders outperformed the others in their industry by 2 to 3x, 2 to 3 times returns. And that gap has gotten wider, through COVID, and that's why this rush to re-platform companies is underway.
Yeah, that's a really interesting subject. I remember looking at a McKinsey study after the global financial crisis. Those companies that focused on that were in essence leaders in customer service and delivery. The customer, 3x outperformed their market cap than those that weren't. And
Yeah.
I think what you're basically saying there with, the digital leaders, would outperform. But that's a fascinating subject. Anything else you want to elaborate on that, Paul, or any other comments on that subject? And I'm gonna.
I think we think a big reason for that the delta in performance was what you talked about earlier, or what you asked about earlier, Jamie, is the challenges in getting there. Companies were having challenges getting there, and that was the biggest. That was the biggest change we saw, is the investments that companies were making to create the platforms, the foundation they needed to get there. So we started talking about the 2020s. Davos last year, we said, man, it seems like a lifetime ago, but it was just 10 months. In January, we said we thought the 2020s were the decade of delivery, the decade of delivering on these digital platforms, digital promise. And what's happened is what we thought would be a decade is happening in 3 or 4 years, which is 2080 we're talking about.
Yeah. Ron, I'm going to change you back to attendee. Thank you for joining us.
Good to see you, Ron. Thanks.
Okay. Boom. This is so much fun, this new skill set I have here.
It's like a superpower, Jamie.
Superpower. I didn't know I had it. All right, let's talk about change pace a bit. In a growth industry, in the innovation economy, Accenture is viewed as a growth company. It's growing faster and more profitable and valued at a premium to its market comps. What's key to keeping this going? Because a growth company gives you a lower cost of capital, ability to attract talent, and what's secret to maintaining that leadership and that growth profile and the resulting leadership position?
Yeah, I mean, I think it's really I think it really comes down to investing to innovate is the way I'd summarize it in a phrase, and that's the view we've had for the last decade has really been around investing to innovate. And you got to pick the right areas, but you have to invest enough to do it as well. So I've talked about it already, what we've done in cloud and digital in these different areas, and you have to have the ability to make the investment, and so you have to operate the company effectively and deliver on your promises, the investor promises and the like. And then you have to innovate to find the new sources of growth. The way I've always thought about this job I have in finding new technology areas is to grow at 10%. We try to grow 2x the market. So let's say in our market that's 8 to 10% is high single digits is where our growth rate would be if we're doubling our market growth. At a $45 billion company, that's over $4 billion. Or the neighborhood of $4 billion of growth each year. So it's like creating 4 unicorns based on revenue of profitable growth each year. And you kind of have to think about it that way, because the technology is changing so fast that you have to find the new areas to invest in. So that's the way I've always thought about this. How do we find the next unicorn businesses within Accenture? And some of those will be fueled by acquisition. Some of those will be grown a little bit more organically. To do that, you've got to invest, though. And that's why you mentioned it earlier, but we have a formula where part of our our overall shareholder and stakeholder formula is we invest over $1 billion a year in acquisitions. We've done 150-ish in the last several years of acquisitions. So $1.5 billion in acquisitions, $1 billion in talent, and $1 billion in roughly in R&D. And you add that together, and we direct that, to the areas that are going to create the innovation in our business. And that's really what you have to keep doing. If something happens and you're not operating the business well and you can't invest for a year, I think you're dead, or you're left behind in the industry that we operate in. When it's about human ingenuity plus technology, you need to invest in the human ingenuity plus the technology, and I think that's the key. The other element is the human side of it with the talent. We invest, we have, I think, the best learning platforms in the industry. We invest a lot in training our people. We at the start of COVID, we said, well, the demand pattern is going to change. This is in March. We said, demand pattern is going to change. We need to invest in our people differently. So we did a quick analysis. We said, what skills are going to be in demand, given the shift in patterns with COVID that we saw with clients shifting what they were buying. And we adjusted our learning programs, and we new skills is what the word we're using, 73,000 people in 6 months. So 73,000 people in 6 months, including, tens of thousands of new cloud certifications and all sorts of things as part of that. And that ability to invest, in the people and, in a way that the people really value is important too.
Yeah. Well, so that leads into kind of two questions. The first one I'll ask is the death of professional services has been predicted for decades, but IT architecture, as you described, really gets more and more complex, and demand continues to grow and new challenges emerge. What do you think Accenture will look like in 5 or 10 years, and how do you feel its mission will evolve?
Yeah, it's a super interesting question. I don't have the magic ball, so the magic 8 ball, so I'm not sure exactly where it'll go. But I would say that like you said, the death has been predicted for a while. I remember when it was ERP in the 90s, ERP, and then 4GLs. Were going to be the death of the professional services business because companies could just use those directly, and then software as a service was So there's always something that's going to be the end of it. But the reality is, every new technology makes it easier for companies to use technology, and every new technology, or most of them, are additive, not subtractive from complexity. So you're adding complexity, and you're adding technologies that are more valuable. And I think that formula of needing expertise and insight around how to get the value out of technology, I don't think will go away for the next decade. So I don't think professional services goes away. I don't think the growth of our industry, so to speak, slows in the next 10 years. It'll be massively different. The way, just like if I look back 10 years ago, we would have had a massive workforce that was doing kind of keyboard style testing of systems, massive, workforce in our industry, and at Accenture. Automated testing and all sorts of things changed, and that's a very small part of the industry and the business now, because there was innovation applied. So I think there'll be many changes in what we do, but I think the idea of insight applied to helping clients get value out of increasingly complex technology is important. And it's like geological layers with technology. All these new technologies we're adding are making it more complex for organizations, not easier. And that's not necessarily a good thing. That's just a reality. And be able to bring the expertise to cut through the complexity and get to value quicker, I think is going to be important for a long time to come.
No, I totally agree. I mean, and you're growing at 2 times tech, and tech grows 2.5 times GDP growth. So it's a good formula. What we do, I mean, software has just been an incredible market, and will be for another, at least you're in my career span, Paul. But so you talked about new skilling and upskilling of your team, and there's a real challenge to sustaining one's current team while working at the tempo that you have to work at during this rapid change, while also trying to increase diversity, inclusion in tech workforce, and keeping up with innovation. I mean, so let's talk about some of the programs and progress Accenture's made on diversity and inclusion, and I mean, it's pretty impressive. I'd love to have you share what you've done in this area.
Yeah,
or in this area?
it's a massive priority for me, and it always has been, and it's a huge priority of Julie Sweet, our CEO, and we've had a long-standing commitment to diversity. I've kind of, I've jumped in early in any way I could, to help with diversity in tech generally, in Accenture and outside. So I'm part of the board of Girls Who Code, working with Reshma Sajani, a great organization, working with code.org, Hadi Partovi and his organization, which is really doing fantastic things. And Fei Li with AI for All is doing great work. So there's many organizations that are dealing with this. So what we're doing at Accenture is trying to support all those organizations in any ways we can to build the ecosystem around, the diversity ecosystem in terms of opportunity. And that's part of that shared success 360-degree value, mantra that I talked about earlier. More than that, we've set our own goals. So we've had a goal for a few years now to be 50-50 gender balance and gender diversity by 2025. And we're well along the way to that. And, we will meet that goal. And then we've accelerated that in many ways, internally and externally, with the programs that we support. Then we've made some other moves in terms of underrepresented minorities. So we had an announcement a few months ago from Julie and Jimmy Etheridge, who runs our U.S. business, about our commitment in the U.S. to double the number of Black and African American and Hispanic and Latin American managing directors in Accenture, and to increase our workforce in those areas to 9%, to above 9% from the level that they're at now. So, substantial commitments to improvement, and kind of really putting real targets in place, and coming out externally with the targets, which we're not afraid to do, and we're committed to the action to meet those targets. In the space we're operating in, Jamie, I think you're aware we launched a new part of Accenture Ventures recently, a new fund called the Black Founders Development Fund and Program. It's run by Kathy Ross, who is the inspiration and idea behind this, which is it's a fund we've set aside $15 million of capital as a start that we've set aside, as well as a network and a program to help increase the success of Black founders. Only 1% of venture capital is going to Black founders, and we think that's really a missed opportunity, an economic disadvantage for Black founders, and we're looking to leverage the resources we have, to make a difference there. So there's a lot more going on. Those are a couple examples, but it's a big commitment we have, because we fundamentally believe equality is a human right. Equality is also at the heart of innovation and innovating in the right way for companies, and we believe it's just the right thing to do.
Yeah. Now thank you for sharing. One of my pleasures in business is spending personal time with execs and entrepreneurs and our investors. Paul and I had a very memorable evening a couple of years ago with Will I Am, the I Am Angel event here in Los Angeles, a fundraiser for bringing opportunities into the inner city. And that was a wonderful evening, and it was fun to spend it with you. And I think we can all do more in that area. Is there any? I'm going to ask Quentin Hardy, who's former New York Times tech, to ask one question. And while I queue him up here, I'm going to put him up to panelists. Do you see any technologies out there, Paul, that will increase the envelope of inclusion? Do you see the no code movement as one as kind of breaking? I mean, is there a technology solution to this technology barrier? I mean, have you seen anything? We recently invested in Unfork in New York. Yeah.
Two thoughts, and I see Quentin there. Hey, Quentin. Two thoughts. One is, first of all, just correcting myself earlier. I said our target is 9%. Our actual now is 9%. We've committed to increase our African American and Hispanic diversity to 12 to 13%. So just to correct my numbers earlier. But in terms of technology, I think I'm not sure there's a technology that's a silver bullet for inclusion and diversity. In fact, we have a lot of problems to solve to make sure technology is not a barrier. Yeah. In the town that I live in, for an example, we have a high free and reduced lunch poverty community, and they struggle with the environment we're in with with schooling now being virtual. They struggle for the access to the resources from an education perspective. That's magnified across the country. So we don't have equal access to technology. So I think we've got to solve some of these issues. And I think there are technology solutions. I think we need to work on things like responsible AI that I've written about a lot in the book, and how do you make sure it doesn't discriminate and that it is fair and advantageous. So I think there's a lot to do there still. I think there's a lot of technologies that are opportunities in opening new avenues for people, but I think we also have to work at realistically at making sure we have the equal access in education.
Yeah, equal access is a big start. And then, as you say, tech has been a barrier where it should be a solution. It'd be great to work on that together over the coming decades. Now, Quentin is a longtime tech editor for New York Times. He's he's at Google as as an executive. He's in the the reporter protection program there. East Bay.
Speaking from an undisclosed location.
Okay.
Paul, good to see you. I guess my question would be around what I'd call data prioritization, and it's kind of a data quality question. As you said earlier, we're seeing so much new data coming in, and we're seeing it come from new directions, and people are very, very curious about figuring out all these new markets. It's like we're in this new landscape. And so the new data, it would seem, is highly privileged, but it's also in all these new categories.
Yep.
How does, well, kind of two parts. How does all that get organized in new data warehouses, perhaps, or in new categories, and consolidated and reconciled with older data? And what skills would you like to see companies hiring for sort of 3 years out as we see better data warehouses and more automation of AI?
I think that it's a great question, Quentin, and good to see you again too. There's a lot of richness to that question, so I'm trying to figure out where to start. I was on with the CIO at a large company yesterday talking about this issue of data, and the issue in their company is actually not the technology; it's data governance, is deciding who owns the data and who will make those decisions. And the problem is that in many companies, the organizations are kind of siloed, and there's no natural owner for certain types of data. So IT inherits the data governance responsibility, and that's not always the best answer because IT might not have the ability to make all the decisions. So I think one thing that companies need to get clear on is data governance and making sure there's clear owners of making the decisions you're talking about, Quentin. Then from a technology perspective, I think there's a lot of room for innovation in just data management, metadata, and those types of tools for companies. There's a lot of room for improvement there. Generally speaking, companies are looking to, if it's part of what they're doing with cloud, they're looking to get to the cloud quickly, build their data lakes or data oceans, depending on how you're viewing it. Because if you get it in one place, you can start to use analytics and heuristics and things to start improving the quality. So getting it to a single place is clearly a good step forward, although it's not the whole answer. There's great companies. Snowflake's a great example of a new innovative company on the data space, but I still think there's a lot of room for innovation there because data is only going to become a bigger blocker for companies as they move more to the cloud, as they use edge more and create more data. Data is going to continue to be the inertia, in the system, I think.
Well, that's great. I think we've taken an hour of your time. We like to start on time and end on time. That was a meaty question to end on. I'm going to put him back to an attendee. Bye, Quentin.
But Quentin's always got good questions.
But thank you, Paul. That's a lot to digest, and we have investors and entrepreneurs and venture investors and investors in us and our team and from around the world who will hear it today or hear recorded later today, and hopefully all your team as well. I really appreciate you having this conversation with us. It's enlightening, it's inspiring, and it's just a huge need that of what we can do and create these companies of tremendous value and create opportunities around them in your workforce and across the workforce for diverse workforce.
It's exciting because if you look at, there's a lot of things you can have a lot of angst on in the world, and as you think about business, a lot of concerns. But I think there's a lot of ability to apply technology, I think, in almost magical ways to solve a lot of the problems we've got. And, so we talk about, delivering on the promise of technology and human ingenuity. I think
Yeah.
we have to get to the that kind of mindset of using our imagination and really stretching boundaries of what we can do. So it's been a great conversation, Jamie. I appreciate it.
Yeah, no, and I got to tell you, one of our benefits, many of our investors are families, and they tell me, Jamie, the more money you make by doing this, the more we give to philanthropy, So there's this somehow that motivates me, Paul. But I mean, it's just there's so much good we can do together at so many different levels for society, and it's an honor to kind of have this friendship and partnership with you. So thank you for spending time with us today and sharing your thoughts. Okay.
Thanks to you and all the listeners. Thank you.